Welcome back to another episode of the Anatomy of the Trade. Today we're discussing the trade that is still unfolding. This is France's trade in Coherus Biosciences. All right, well, let's jump into it. France, so please do tell us about the long-term outlook for this particular stock.
Okay, well, hello everybody. Coherus was on my watch list at the time of this purchase. It's a biosimilar company, which is the generic version, the generic manufacturing version of a biotech company. At the time I got into it, the fundamentals were very strong. It had a 65% earnings estimate increase for this year. Since then, the fundamentals have eroded, and it's been somewhat reflected in the action of the stock. So I thought it would be interesting to discuss this from the standpoint of, well, what if you're in something and it starts to go bad on you? How do you manage that? And there's some mistakes that we're going to see that I made going through this trade, in addition to just the fundamentals deteriorating, that made this even worse for me. But at any rate, that's kind of the background. The first chart that we're looking here is a monthly chart, so you can see all the way back to the IPO date that the stock had a lot of volatility when it first came out, even on a monthly basis, was in sort of a downtrending market. And then I noticed on this last reaction, this last monthly reaction, that the stock sort of broke out, first of all, out of this monthly down channel. Secondly, instead of having the reaction that it had the last upswing, which was just to go straight back down again, it went up, and there was a change of behavior where it went into more of a horizontal consolidation trading range. And it has been sort of honoring, staying above the top of that downtrending line. So, technically, what do you think, Roman? It doesn't look
I
terrible.
really like what you just said, and that is that volatility that we had before, has subsided, and we could see this also from the shortening of the thrust. Look at how this reaction right here cannot make a new lower low. Also, in this area right here, there's definitely some buying that is going on. The spread is diminishing. There is some volume increases. And then this is a really good rally. I mean, even though it looks like the same rally of the same magnitude as this one, but in reality, we're spending slightly more time rallying, and it's a little bit more consistent in the buying signature. And then, of course, this area right here, the way that how you described it, the break out of the downsloping channel and a more horizontal price action, that actually makes a lot of sense. And I could see how that was, appealing to open a position that early on. Obviously, COVID-19 reaction comes later, and we're just becoming the victim of that on the way down, but quick recovery. So let's go through all of the points of entry and exits, how you were managing the trade. So please do tell us.
Okay. This is a daily chart, and so I noticed that we had sort of a buying climax over there around July of 2019, and then a definitely change of behavior, set up a would have been an automatic reaction, secondary test, and pretty well established trading range there if you look at it. So going across, there's one touch, phase B is a secondary test right under where you've got your cursor right now, and then did not read this well. This sideways, it's really more, one of the things that Bruce was talking about last night in looking at phase C is you don't want to see a stock or any instrument staying in this in this pattern as long as this is, and drawing a conclusion that it's phase C. You should see a more rapid kind of, a rapid change from that shows that supply has been absorbed. You're really not seeing that here, so I didn't read that right. But when it took that first significant bar move out, I thought, well, okay, not reading it right, but this has got to be some sort of breakout. So that was my POE number one, which was okay. It came back, gave me a little heat, then went back up. But after that, I did not have a stop loss in place, which was just like a complete disaster. If I would have been, bad. I got to experience that whole beautiful, swan dive from 24 down to 11. So, 50% off down off the top. But the market kind of bailed me out. And as it was going down, I still liked the fundamentals. I wasn't even thinking about, I was just thinking, well, this is a lot cheaper than it was when I bought it, so I had to buy some more. So POE number 2 there was roughly 1/3 of the initial position that I added, but not real good timing. But at any rate, I bought it on that recovery bar because I thought, well, maybe this is the beginning of the recovery, and it was just a little bit too early. So went down, the stock started to come back up again, and then it started to pull back, and which is normal. After a low like that, you're going to get a test, but I wasn't willing to find out if the test was going to hold or not. So I just bailed out with a very slight profit there at exit number 1, which wipes out POE number 2. So that was flat right there. Basically got out with my skin, but that was about all. Then as it went through this sideways consolidation, the fundamentals started deteriorating. They had some earnings. Some of the really lofty analyst expectations for profit growth for this year and for next year have really come in a lot, especially next year. They're actually, when I bought this, we were looking for growth in earnings this year and next year. Now they're looking for actually earnings to be down, not a loss, but earnings to be down next year over this year. So that concerned me, and I thought, well, I've got a pretty big size in this position. It's still in the right group. It's in biotech, which is one of the strongest rated industry groups right now, performing very well, big long cause, but I want to reduce my position. So exits 2 and 3 got me back to a position size that I've controlled my risk in the portfolio, and if it goes back now, I've got a stop that's set just under that little horizontal trading range there. So I know what my risk is. I know what my exposure is. So that's basically the story.
Interesting. All right.
But from a stamp, go ahead.
So at the end, you came to the correct size, and you came to the correct stop loss, and you came to the correct position in the correct group. But before that, that was just, kind of like a struggle to get here.
Yes.
Mm-hmm. Well,
and a lot of it is because of what we're doing in the trading group, is just to, look at positions closely. You can't be haphazard about these things. So, having a process has really helped me to analyze, my mistakes and try to.
You have to. Absolutely. So I would say that probably majority of the mistakes that you could have committed, you probably did. So it's just a really good case study for us to think about, how we're managing a position. I think that, getting into the position here is not necessarily, a big type of mistake, because we all could have been thinking that, yeah, somewhere here around this area, there could be like phase C. So I could definitely see that. Also, if we're recognizing that this is B, we're not seeing a lot of distributional characteristics, so I understand how that entry could have been. Um, what I would kind of suggest is this type of bars, they look extremely bullish, and so you always have to look into the resistance that they are attacking and they are trying to commit over. And in this case, we're seeing it's kind of in the middle, so it's not necessarily committing that much. So the next day seems to be an okay test day. This test, even the lower test, still not violating the low, so this is good. So you might be feeling okay here, but right away, the character of this move is a little bit problematic. We want to see something not necessarily akin to the bar that we've seen on the entry, but more closer to that. Something where, there is some kind of expansion of the spread. So we don't see that. There is some demand behind it, but, not that much. And again, the rally has to commit over for the sign of strength, and it did not. So somewhere here, I would say, Franz, that this was the time to consider getting out of the position. I think you either have to capitulate right away on the failure off the top, or you could capitulate somewhere here. So that way your stop loss that was supposed to be somewhere here actually would be triggered, and you would be okay. Another mistake obviously is just to add into already a losing position, but I also see the structural logic in here, as you probably were thinking like a spring. This is like a good recovery on some volume signatures, so that's all understandable. So that probably just kind of like decreased your average price entry to around this level. And then I'm not sure how you went through this, because I mean, like right away, next day, you have a losing second position right there, but miraculously you did, and then you're doing exactly what a lot of people would do. At the point of the break even, close the position. At almost the point of the break even, close the position, and kind of like reorient yourself. So I think that just tactically closing position at least somewhere here in this area would keep you out of this. Even if you open in the position here, your stop loss could have been here and you're just out, and you kind of have this fresh mind, fresh start. So we would be looking into this area and somewhere here. This could be a point of entry, but we did not see this right away. So maybe somewhere here, and still we're expecting some kind of continuation. So anything in this area would be a much better point of entry in general. But and there are so many things here, Franz, that we should work on. Point of entry as the original point of entry, stop losses. So we didn't honor the stop loss. We didn't have the stop loss. Not closing when the stop loss, is supposed to come. Then adding to a losing position, exiting after the signs of good recovery on the test. So the test actually was successful. You could have waited, to stay in this position as well. And then exiting the position after the signs of, changes of behavior and some strength. So I don't know, what else did I miss, Franz? What do you think?
You hit thing two and exit number three were not taken from the standpoint of stock price performance. They were taken from a portfolio, risk exposure. Because now I know where my downside is, and I know how much risk I'm willing to take if it goes to that. So I was just carrying way too much, way too much inventory,
Mhm.
and I just reduced it so that if it does go back and if my stop gets taken out, which I will honor this time, that I know what my risk, I've contained the amount of risk that I'm willing to take. So yeah, lots of mistakes. Lots of
Uh,
mistakes. Thanks for pointing them out.
yeah, well, we have to. And this is kind of like the analysis that we have to do for all of our trades. And I'm very grateful that Franz, is willing to step in here and just to show his mistakes like this. And we're creating the environment where, discussion of mistakes is kind of like easy and non-threatening. We definitely want to know everything that we can to bring that awareness. So for those of you who are viewing this recording, the main thing, go to your previous trades, the ones that you already closed, and start analyzing them the same way as we do. Usually we would have some kind of post-trade analysis, a table. So you've seen this in the previous videos. Have that, and also just write about your trades. What were the mistakes? How you should have conducted yourself with this particular position. That's the most helpful thing to bring awareness. Now, awareness is not necessarily right away a change in behavior, so you will have to, figure out the way how to install this into your current process, so that you wouldn't repeat those mistakes. So let me ask you, Franz, um, what are the rules? Because you always work on your rules. So what are the rules from this experience, from this trade that you could say, yeah, I'm going to implement those right now?
Okay, well, rule number one is which I did follow, is selection to begin with. So at the time of the selection, this did meet all the other requirements that I expect from a stock investment position. So that part of it was honored, but much more in-depth analysis. And I've made myself this rule that I may not get into a position until I have looked at the monthly, weekly, and daily charts in depth, like we just did, like you just did here for me, and really understand what is happening. Just, a breakout is not something just to get real excited about and, just, throw all caution to the wind. You have to go back and you have to say, okay, what's the context? So that's the first thing. Secondly, one of the most fundamental rules is know what your risk is before you get in a position, which you have to have, a stop loss to do that. And to not have a stop
Mm-hmm.
loss is just,
Mm-hmm.
it's at some point I lucked out here, but at some point, you can, it's putting a gun to your head.
Mm-hmm.
So it's not good trade management. So I would say those two things. The rest of it, adding to a losing position, if it had been managed right in the first place, I wouldn't have had to make that decision. So
Mm-hmm.
that's kind of a rule that shouldn't even have to exist in the first place.
Mm-hmm.
Having an exit number one, having an understanding of how is this going to behave. There is going to be, after a big sell off, a big shakeout like it had, there's going to be a test. Expect that, and don't get scared away just because the market's behaving like it should. So that's another kind of another rule. That it's not really a rule, it's just sort of a mental state that you have to be in. And then I guess other than that, if fundamentals of an investment position, because I've got quite a few stocks that were on my watch list at the same time that this was, that are making new all-time highs, that are gone, that are way outperforming the market. This is not. So obviously the fundamentals have something to do with the fact that this stock hasn't been able to break out of this horizontal trading range. So, that's another thing is it doesn't really have much to do with what we're talking about from a technical analysis, other than to be aware that it could flavor the overall context of the stock that you're in. If that makes any sense. I don't know if
Yeah.
you can make a rule out of that, but
Yeah.
what do you think?
Yeah, all of those are really, really great points, really, really great rules. So now it's just a matter of incorporating this into your process, for other
Mhm.
positions that either you currently have or you're going to have. And just remember in this trade, and I wonder if you could just even like, print this, particular slide with all of these rules and just have it somewhere in front of you, just as a reminder, as a gentle reminder, this is what I've done before. Do I want this again? So with each point of entry, you could just look at this chart, look at those rules, and just like, okay, am I doing the same thing? Am I creating the same type of mistakes? And that would be probably the most valuable thing to do. All right, Franz. Well, thank you for sharing with us your unfolding trade, and thank you for uh, being okay showing your mistakes. We really appreciate this. A lot of people will learn from this, so we appreciate it. Thank you,
Well,
Franz.
including myself, hopefully. So that's the reason I laid it all out there, because
Absolutely.
I appreciate your feedback, and I hope other
Absolutely.
people can benefit from it.
Absolutely. And thank you guys for watching. We'll see you next week with the next episode of the Anatomy of the Trade.